If you've been sitting on the sidelines of this housing market, waiting for something to change, a massive update to the American credit scoring system just altered the game entirely. For decades, the traditional credit scoring system penalized responsible people for things that didn't paint an accurate picture of their financial health, like paying off your credit card balance just a few days too late in the month or getting hit with an unfair medical bill. But right now, a brand new set of regulations is rolling out across Fannie Mae, Freddie Mac, and the FHA. This new credit rule completely updates how your score is calculated, and it is actively unlocking the market for buyers who previously thought they couldn't qualify for a home. To understand why this helps you, you have to understand how broken the old credit scoring system really was. Legacy models use what is called a static snapshot, meaning they only looked at what your credit balances looked like on the exact day a lender pulled your report. The new model, known as VantageScore 4.0, throws that out and looks at 24 months of trended credit data. This means the system finally tracks a movie of your habits rather than a single photo, allowing it to tell the difference between what the industry calls a revolver and transactor. A revolver carries a high balance month after month, while a transactor uses their credits for points but pays them off in full monthly. Under the old systems, if a lender pulled your credit on the day your statement closed, your utilization looked dangerously high and your score plummeted. The new trended data model completely fixes this by recognizing and rewarding your long-term consistency. Because of this historic shift, there are three specific types of buyers who are going to see an immediate lift in their home buying power. First are the diligent renters who have historically suffered from a thin credit file. The old system forced a frustrating catch-22 where you couldn't get a mortgage without a deep credit history, but you couldn't build that history without taking on traditional debt. If you are someone who avoids credit cards but pays your rent flawlessly every month, the new model can now safely factor in your rental history and utility payments. This single modification to the credit scoring system is suddenly opening the door to prime financing for millions of Americans who play by the rules but prefer to live debt-free. The second group of big winners includes anyone who has been sidelined by medical debt. The American healthcare billing system is notoriously complicated, and an unexpected medical emergency or insurance dispute can easily send an unpaid bill straight to collections, tanking an otherwise perfect credit score for up to 7 years. Under these new regulations, medical collections are completely ignored when calculating your score. If an old medical bill was the primary roadblock keeping you from a mortgage pre-approval, that obstacle has officially been erased from the math. Finally, this system heavily favors the recent rebounder. Life happens to everyone, and a temporary job loss or economic hurdle a couple of years ago might have caused a few late payments on your record. Under older scoring models, those past mistakes carry heavy, stagnant weight for years. However, because the new trended data algorithm analyzes the overall trajectory of your finances, it actually rewards an upward trend. If you have spent the last 12 to 18 months digging your way out of debt and paying your bills perfectly, the system prioritizes where your finances are heading today over where you were 2 years ago. Now, here is the most crucial piece of the puzzle that you need to know before you apply. Even though the federal housing authorities have fully approved this updated credit scoring system, not every single bank or mortgage company is set up to use it yet. The mortgage industry as a whole can be incredibly slow to adopt new technology. So if you walk into a traditional brick and mortar bank down the street, They might still evaluate your application using a legacy platform from the early 2000s, leading to a quick rejection. But if you work with a modern, forward-thinking real estate team and a progressive lender who is fully integrated with these new regulations, that exact same financial profile can easily result in a mortgage pre-approved. If you have been holding off on your dream of home ownership because you were worried about your credit, or if you were turned down by a lender in the past, it is time to get a second opinion under these brand new rules. My team and I monitor these regulatory updates daily, so you don't have to navigate the confusion alone. If you want to see exactly how this updated credit scoring system applies to your current financial situation, reach out to me directly using the link in the description below. I will personally review your real estate goals and connect you with one of our premier lender partners who actively uses these advanced models to get buyers approved. Let's find out what your true home buying power is today. Take a second to drop your thoughts in the comments below. Make sure to hit that subscribe button for more market updates. And I will see you guys in my next video.